So let's talk about Tesla. You hear the name everywhere. It's almost impossible to ignore it. The company is famous for making electric cars that look futuristic. These aren't just any cars, they are fast, sleek, and packed with technology. Think of them as computers on wheels. People who own them absolutely love them. They talk about the instant acceleration and the giant touchscreen inside. This has created a brand that is incredibly powerful. It's not just a car, it's a statement. People see a Tesla and they think of innovation and the future. This strong brand is a huge reason why the company gets so much attention. But here is what a lot of people miss. Tesla is not just a car company. That is a massive oversimplification. They are really a technology and energy company. For example, they have a whole division dedicated to solar energy. It shows that Tesla's vision is much bigger than just selling cars. Alright, let's get down to the numbers and talk about the stock price. As of today, September 16, 2025, Tesla's stock has been on an incredible run. It feels like every other day you see a headline about it hitting a new high. So, what is actually causing this? A big reason is simply financial performance. For a long time, people said Tesla couldn't make a profit. They were burning through cash like crazy. But over the last few years, that has completely changed. The company has been posting consistent profits quarter after quarter. When a company proves it can make money, investors take notice. Another huge factor is something called expectations. We also need to talk about stock splits. Lastly, there's the fear of missing out, or FOMO. When investors see a stock going up and up, they get nervous about being left behind. They see their friends or people online talking about how much money they've made on Tesla. This rush of buying from FOMO can create a feedback loop. It can create these explosive upward moves in the stock. So, where is all this growth actually coming from? The most obvious answer is vehicle sales. Tesla's delivery numbers have been growing at an incredible rate. Gigafactories are a big part of that growth. Texas, Germany, China, these factories are like giant machines that pump out cars. Tesla's product lineup has expanded significantly. Model S, Model X, Model 3, Model Y. The Model Y became a global bestseller. Cybertruck rollout has begun in larger numbers. There's also the Tesla Semi, an electric truck for logistics. Innovation is the lifeblood of Tesla's growth. Tesla has been working on its own 4,680 battery cells. They use huge casting machines to make car bodies as a single piece of metal. Finally, let's look at their global expansion. Gigafactory Shanghai, a massive success, and exports to other countries in Asia and Europe. This global footprint is crucial for long-term growth and for becoming a dominant force in the auto industry. When you look at what Wall Street is saying about Tesla, you see a huge range of opinions. It is honestly one of the most polarizing stocks out there. On one side, you have the Tesla bulls. These are the investors and analysts who are extremely optimistic. One of the most famous bulls is Cathie Wood from RK Invest. They believe Tesla's lead in self-driving technology will eventually allow it to launch a robo-taxi network. These bulls point to Tesla's incredible execution. They see Tesla not as a car company, but as an AI and robotics company. They believe the data collected from millions of Tesla cars gives them an unbeatable advantage in developing a true self-driving system. For them, the current stock price is just a stepping stone to much greater heights. On the other side of the trade, you have the Tesla bears. They often argue that Tesla's valuation is completely detached from reality. They compare Tesla's market capitalization to that of other major automakers combined and say it makes no sense. Are all investing billions into electric vehicles? The bears also raise concerns about key person risk with Elon Musk. Furthermore, they are skeptical about the timelines for products like full self-driving. For the bears, Tesla is a classic example of a speculative bubble that is just waiting to pop. Tesla's stock doesn't exist in a vacuum. A lot of its recent success has been helped by broader market trends and specific news items. One of the biggest tailwinds has been the global push towards electrification. Governments around the world are setting deadlines to phase out gasoline-powered cars. They are offering tax credits and subsidies to people who buy electric vehicles. This regulatory push creates a massive guaranteed market for companies like Tesla. Recent news about Tesla's charging standard has also been a huge win. Recently, however, a number of major automakers, including Ford, GM, and Rivian, have announced that they will adopt Tesla's charging plug, now called the North American Charging Standard, or NASS. It essentially makes Tesla's supercharger network the standard for the entire industry in North America. The overall stock market environment has also been favorable. After a tough period, we've seen a renewed interest in growth and technology stocks. Inflation has been cooling down, And there is talk that the Federal Reserve might stop raising interest rates or even start cutting them. We also have to mention the hype around artificial intelligence. AI is the hottest topic in the market right now, and Tesla has successfully positioned itself as an AI company. Elon Musk has held AI Day events to showcase their work, including the Dojo supercomputer and the Optimus humanoid robot. This association with the AI boom has helped to justify Tesla's high valuation and has drawn in a new class of tech-focused investors, further fueling the stock's incredible rise. Looking to the future, the road for Tesla is paved with massive opportunities. The biggest one is still the global transition to electric vehicles. Right now, EVs are still a small percentage of all the cars on the road. This means there is an enormous runway for growth as Tesla continues to scale up production, potentially introduce an even more affordable next-generation vehicle, expansion of the energy business, large-scale battery storage projects. Another huge potential catalyst is autonomy. If Tesla can solve full self-driving, it would be monumental. A network of autonomous robotaxis could transform transportation and be incredibly profitable. Similarly, the Optimus robot, if successful, could be an even bigger market than the car business. However, the road is not without its potholes. Significant risks remain. The most immediate risk is competition. Nearly every major automaker is rolling out compelling EVs. Companies from China like BYD are growing fast and are very competitive on price. That competition could pressure Tesla's market share and profit margins. The company's execution will have to remain nearly flawless to stay ahead. Finally, there is valuation risk. Tesla's stock is expensive. Incredibly high expectations are already priced in. If Tesla fails to deliver on growth, self-driving or robotics, the stock could fall dramatically. Operational missteps, production delays, a slowdown in demand, any of those could be severely punished by the market. The high-risk, high-reward nature of Tesla is what makes it one of the most fascinating market stories today.